Okay, you're still with me. All right, so we'll have a brief panel discussion, pretty much just to get reactions of what we've heard from both of our presenters. So one on the economic front and the other from the market front. So panelists, I'm going to ask you a series of questions, and as Nalu stated, they are from different institutions, two from fund management, pension side, and then one from the investment analyst side or the brokerage side of the market. So hopefully we can get full views from there. From what I picked up pretty much from the presentations, on the economic front, though challenging, there is opportunity. From the market side, clearly, large opportunity there. So how can we take advantage of participating on the market, both from a fund manager's perspective and also from a broker's perspective? So I'll start with Nasilele, who is on my immediate left. What are the immediate reactions to the market breakdown? What do you think, from a fund manager's perspective, what are the key things which stood out for you?
Thank you. Good evening, everyone. From our end, performance for this year has definitely continued to defy our expectations. I mean, the LuSE is now in its fourth year of rallying. This marks the longest rally we've seen on the local markets in over a decade. So that's definitely huge. And we continue to be surprised by the performance, definitely. I mean, obviously, there are a few key stocks, such as the CEC, that continue to drive performance. And yeah, overall, we are fairly happy with where we are seeing the markets.
I'll pass the same question on to Mchema as well.
I echo all the points that Nasilele was making regarding the rally. I think an important point was the economic base that we had come from right before COVID and the like. A lot of shares were trading sub of even 1 kwacha, and the rallies that they've experienced going upwards has really impressed us and has really contributed to the performance of the market. We've also had a couple of takeovers which have happened. So we've got Chilanga Cement, which everyone, I'm sure everyone in the room remembers, used to be Lafarge. So that was a takeover this year. We've also had another takeover with Tash Mamozi Hotels, which used to be owned by Tata International and now is owned by ASP Hospitality. That particular takeover was at a 400% premium. So that really improves our numbers. CEC remains the bluest of blue chip stocks and continues to do well. They've done some downstream vertical integration as well, getting into electricity generation through their wholly owned subsidiary CEC Renewables, which did a green bond last year. And Airtel has been paying dividends, very strong dividends. I think they've paid a dividend every quarter since 2023. And if you look at the share performance from the time that they got in until now, it's been amazing. So even if you had gotten in, let's say mid last year, you'd be smiling very much right now. A lot of companies also started going into a situation where they had a lot of loans which were in dollars. They started to convert those into local currency, which helped them with their debt service payments, which really improved their situation. So I think a lot of companies on the Lusaka Securities Exchange are making a lot of moves, and the market has rewarded them for that performance.
Indeed. Thank you, Mchema. I'll move to Inuto on the point of opportunity. But where are we seeing the opportunity, especially from an institutional investor's perspective? What are they looking for at the moment? We've seen the market rally. Where are the key touch points? What are they looking at in terms of investment?
Okay, so in terms of investments, primarily our investment universe does include your listed equities, your corporate bonds, your government bonds as well. So the opportunity for us has really been seeing where growth is going. It's really not, especially for institutional investors, it's really not just about where growth is now. It's about where growth will be in 5, 10, 15 years. And when you're looking even at the market, and like my colleagues have said, when you're looking at the markets and you're comparing what's happening on the government bond yield and what's happening on the LuSE, you're seeing an inverse relationship. So the government bond yield is going down while the LuSE is going upwards. And just to comment on the slide that Mr. Kabaso did show, on the LuSE and how it's the market cap in USD. One surprising thing is we were tracking that same figure some time back, and we noticed that something that was really driving the LuSE was really that there were a lot of foreign participants who were selling, and that kind of had, it was driving the market into an undervalued position, such that most of the stocks were really, really at their lowest valuations. But then now what we're starting to see is that that tide is slowly turning, and the foreign investors are kind of, they're not selling as much as they were selling. And that's also giving an opportunity for the valuations are still relatively low, especially even when you compare them on a regional scale. When you look at the Zambian market itself and you compare it to a market like Ghana, it's only a matter of time before it attracts more foreign investment, which is going to increase those valuations quite substantially. So in terms of institutions or pension funds that are not already heavily in equity, it's an opportunity to rebalance your portfolio. Of course, you have to look at which sectors are doing well, which sectors are also likely to do well for a longer period, and which sectors, especially in periods like this one where you have El Nino impacts, those are years that really show you which sectors are resilient. So if you're making your portfolio, you're looking for growth where there's resilience. Yeah.
Thanks, Sinutu. Since you're running away from naming the sectors, I'll ask Nasilele. What are the sectors, some of the sectors which you've seen are hotspots, and what sectors should we look out for?
Thank you. I think with the way our market is structured, it's a bit difficult to really speak about sectors per se, because if you take a dive into this slide that Mr. Kabazo had up that showed the various sectors that make up our market, most of those are made up of one stock, really. So there's really not much to speak about from a sector perspective. I mean, obviously, CEC is a big one that everyone is buzzing about right now. And in terms of performance, you can also see that CEC makes up right now close to 40% of our free float. So, I mean, let me say energy, where CEC is definitely the big one. We can also add your Puma in there. Puma has done quite well. And you also look at, I suppose, your manufacturing. We have the likes of Zamefa in there and a bit of BATZ. So those are stocks that even when you look at the outlook, you expect that they'll continue to remain resilient despite the challenging economic times in the short term.
Thank you. On to Chema. Just a question now. Nasilele has highlighted, well, some of the sectors. And we've seen this rally going up. Yes, we've had the participation of institutional investors, but how big of a part has retail investors played? We can't negate the fact, I think we saw the pie chart which was there. We are now, I mean, they're pushing the numbers. Before 10% was something we wouldn't look at. We were looking at between 2% and 3%, now at 10%. So how do we look at retail participation today and looking forward?
So as a broker, I'm biased. We deal with retail traders all the time. While I do love our institutional investors here, and I hope they send more business our way, retail traders really are our bread and butter. And I'm going to borrow words from our executive, Charles Mate. Mr. Mate always says about the Lusaka Securities Exchange that retail traders are essentially the pathfinders. So typically, institutional investors tend to operate on a buy and hold strategy, very fundamental, very value-oriented, looking at the financials and the numbers, which is very important and is the way they should be going. Retail traders tend to take more of a gamble, one. Two, retail traders care quite a bit about dividends. So I'll give the example of Airtel. Airtel, because of the dividends that they've paid every quarter, has shot up incredibly. And that's because a lot of retail traders have seen the activity. So a lot of Zambians look at companies and dividends as a way to supplement their income. So dividends matter to them far more than, let's say, improved revenue numbers or cost optimization strategies that you've been undergoing. You may have all of that, but if they're not getting the money in their pocket through dividends, they don't care as much as the institutional investors would. So retail traders are still very important. It's a way that share price appreciation can start to happen, because if you have a lot of investors who are on a buy and hold strategy and you've got no other traders to push the share price up, your returns don't come in, your returns don't matter, you won't realize them.
That's good. So there is a good need, essentially, for retail participation on the market together with a blend of the institutional investors. I'll move to maybe on our final round of questions. So let's talk about outlook. I know, obviously, in terms of projecting, it may be a little bit tricky, but what are we seeing, given the economic environment we're in, given the way the LuSE is performing? Almost, sometimes you look at them, they look like a bit of a contrast. Where are we going? What are some of the things you see, panning out towards the end of the year? And then, obviously, what your call would be then to people who are in this room, clients, listed companies, pension funds. Where are we moving?
Okay, just to make one comment related to what he said on retail investors. I think the problem that we've noted is when you're looking at the daily volumes of what's happening on the LuSE, and the people who are driving, as he said, the pathfinders are the retail investors. But then the retail investors don't have as much information as me and Nasilele. Me and Nasilele are looking at, this is the valuation, these are the financials, this is what they've said, this is the strategic plan. The retail investor is just going to buy, okay, I heard there's a dividend. Oh, I think I like this company. It seems like it's doing well. And I think there's an information gap there that would help them if they had more information about some of the companies, because there's some where you would be surprised, why are you buying this stock? But somebody bought it. Or somebody is selling the stock and you're wondering, why are you selling this stock? And because of that information lag, or that lack of information so that people can make informed decisions, sometimes the market can there's a lot of noise of either people having certain pressures and selling something, and then the share price also goes up. And just that, if we had more from the brokers in terms of papers, where you are sending these out to your clients so that even as they're looking at the LuSE, they have more information for them to make informed decisions and good decisions that go with that. So in terms of the outlook, overall, we do expect equity to continue to be very, very strong. And in the period that we're going in, especially that we're going towards an economic recovery, when the economy is doing well, most times the capital market also does well. So you'll find that the LuSE is likely to continue to rally. I think in the interim, there might be issues to do with I think our expectation, of course, was that we expected that there were certain stocks or companies that were going to suffer because of the economy being quite low and El Nino being quite affecting your energy, affecting your production costs. But what's been surprising in the last few weeks has been that even companies that we weren't expecting to do well actually did well for the first half. Of course, the second half is yet to come. But then you're finding that there are unexpected linkages, and you find that there's been a resilience that over the years companies have been able to build up. So you find that their strategies are not just, I think because we've come from a low base, companies have hedged their strategies such that they have strategies that can either work for a Zambia situation, or they can work if they maybe export some of their products. So there's that hedge that's being built into most of these companies. So it's really just about identifying, okay, like I said, really, it's identifying which sectors. Going to the ZamStats, sometimes it's really just about reading boring documents and trying to find a trend. So reading ZamStats, where is the growth? I think some of the key things that have been mentioned, mining is doing well. I don't know about ZCCMIH, but mining is doing well from a GDP perspective this year. Construction has also been quite surprising. It's also been resilient, I think, for the last 3 quarters, and we're seeing that construction is coming back up, which is why when you even look at the price of Chilanga cement, it started the year at about 13, it's now at 20. And when you're looking at their numbers, you're looking at their financials, you can see that there's some positive things that are happening there. Financial sector, financial services, right now on the retail end, there's the perception that financial services is doing badly. So they're selling the stock and the prices are coming down. But then you have to think about financial services and every stock of yours, not just in this moment, but where will it be in 10 years? Are we saying that these problems with the statutory reserve ratio are going to be pervasive for 5 years? Are they going to be pervasive for 10 years? How does that impact the financial services? So those are things to also think about. Yeah.
Thank you, Nutu. I'll pass it on to Mchema for the same question, or same statement rather. Outlook, and then the call to clients or people in this room to come to market.
Okay. Inutu has done a fantastic job on economic impacts, looking at data and the likes. I'm not even going to touch that. I think I would do it a disservice. I'm going to look at it purely from corporate actions for companies. So generally, as I said, retail traders care about dividends, as she highlighted. So institutional traders take a far more in-depth and well-researched view of companies. But if we're looking at share price appreciation, which is what I'm going to focus on, we've got quite a few companies who have surprised us with the interim dividends that they're paying. Airtel, continuing its trend, has paid an interim dividend. Chilanga's announced a dividend. BATZ has also announced a dividend, and they're doing fine. But Chilanga, as she said, has risen from 13 kwacha to 20 kwacha right now. After the takeover about 2 years ago, I mean, you've got a new company coming over, you've got new management, maybe a new strategic plan. We weren't too sure how they were going to continue from the previous owners of Lafarge, but the new shareholders have shown quite some good resilience. Financial results have been doing good, and they've paid dividends. So I think for particular companies, I think the ones which have been doing well in the beginning of the year will continue to do well towards the end of the year, I hope. And I hope that we start seeing more price appreciation and more activity from the retail traders. As a call to action, I think one of the important things that I think a lot of people don't realize is you pay virtually no taxes for participating in the capital markets. So we've been talking about dividends. You don't pay any taxes on dividends. When you buy a share for 2 kwacha and sell it for 5 kwacha, you pay no capital gains tax. So that in comparison to, let's say, government bonds, every coupon that you get from a government bond, they're going to tax you on the withholding tax. So even if you're looking at the yields, the money that actually hits your pocket is not the amount of money that you can calculate from your yield. However, when it comes to the capital markets, the dividend that you get, the share price appreciation, that hits your pocket directly. And while there is more volatility, with bonds, your return is fixed once you get into the bond. With stocks, you can have the situations where we've been talking about. Pamosi, risen by 400%. Chilanga, if you bought at the beginning of the year, now at 20 kwacha, you've made over 50% of the value that you put in, and that's just at 6 months. So doing research, trying to get into the company, please speak to your broker. I'm going to say that again. Please speak to your broker, and specifically, please speak to Stockbroker Zambia about which shares you can get into. Also, and I think this is an important point, liquidity in the stock that you're buying is very, very important. Because one of the things that can trip up a lot of people is assuming that getting into the stock will be as easy as getting out of the stock, which is not true. We work on an open market. No one can force you to buy shares. No one can force you to sell shares. So you can buy shares, and you may want to sell your shares to realize your value, and that can just not happen for you because no one wants to buy their shares from you. Also, you may want to get into a company and no one wants to buy the shares because suddenly it's doing well. CEC paid a dividend. There were orders in the market to sell CEC. Immediately that dividend was announced, all of those went away because suddenly everyone knows the dividend is coming. I'm not going to sell my shares. And the share price has gone up by, I think, 2 kwacha in the last 2 weeks or so. I think it's about 2 kwacha or so. So while there is volatility, there is a lot of opportunity coming into the capital markets. And please have a conversation with us.
Thank you. Nasilela, the same one, just to finish us off.
I think a lot has already been said. Overall, the outlook for our local equity market is fairly positive. The retails, like Initi said, give us there's a lot of noise that they create around the markets, but I mean, those have actually played a very significant role in terms of moving the market to where it is today. The sectors have already been spoken to in terms of where you'd want to be. It's the key ones. I like the point that you need to put around the financial sector. Right now, the sector seems to be doing quite badly. We've seen a few downward price movements the last couple of weeks. But overall, the outlook in line with expected economic recovery is fairly positive. And fund managers or institutional investors would actually attest that local equities are currently carrying our portfolios in terms of performance. So we remain fairly positive in terms of the outlook for the sector. Thank you.
Thank you very much. I think the panelists have done a sensational job in highlighting some of the key areas they're looking at. And I think from my end, a bit biased from the LuSE, but there is opportunity in the market, particularly on the equity side. You've seen the numbers. Numbers don't lie. So we ask those who are pension funds who are here, those who are brokers, those who are retail investors, and even just entities, just to come and participate on the market. There's opportunity, there's growth opportunity. Please speak to us, speak to any of the panelists, speak to myself. If you're looking at it from a LuSE perspective, we'd be more than happy to hear from you. With that said, thank you very much, and I'll pass it.